Good afternoon, traders. This is Tony D from easyMarkets. Back after a little break here. Update for today, though, we have some interesting developments in the last 3 days since the last update, and it's important that we quickly go over what's happening. So Trump has got aggressive, and first time in around 3 or 4 presidents, there's been a direct sort of pressure put on the Federal Reserve regarding interest rates. He said he didn't like them. They're raising rates, making it more expensive, making the US dollar stronger. And then he had some pretty strong words for the ECB and the China regarding their devaluation. They think they're devaluing their currency to manipulate it to be weaker than it really should be at this time. This had a dramatic effect on the euro. You can see the rally from below 116 all the way to 117.40. We have pulled back a little bit as the effect is being calibrated, and we did reach that resistance. But this sort of, and more comments coming through in the next 24-48 hours from Trump regarding Euro and ECB policies definitely has the potential to continue this. And given the impulsiveness of that first move, I wouldn't rule out that the US dollar, in the short term anyway, has reached a top. You see, this is the 4th attempt of the 95 level from the US dollar index that it failed at. So far, though, it hasn't pulled back too much. It really hasn't started a downtrend or anything. It's just the door is open for that potential. Now, the dollar yen selling was very aggressive as well. Now, combined with the US dollar weakness from Trump's comments, but also combined with the fact that there was some speculation that BOJ is moving towards changing its monetary policy for the first time in a long time. Whilst it's not clear exactly how they're going to do that, any sort of changes could have dramatic effects on the yen, because on many metrics the yen is very undervalued, and so which you'd expect after 10 years of quantitative easing from a central bank. Now, the place where we're starting to see big moves coming through is the 10-year bonds. If it's getting close to the end of this experiment in monetary policy from the BOJ, the big change would happen in the longer term yields, as they would have a bigger exposure to any change in monetary policy. Now, whilst the economy isn't reaching its inflation target, the big argument about whether they can continue to print money and buy stocks at the same speed and bonds at the same speed they've been doing is the question, without distorting the market. Now, if they do try a different tact that doesn't involve this, then of course the yields on the 10-year would get larger, and the 10-year yields in Japan, if they were to jump up, then remember that the US 10-year yield was the biggest driver of dollar yen. And the reason that we didn't ever compare the yield of Japanese 10-year to the yield of the US 10-year is that the yield of the Japanese 10-year hadn't moved for many years. Now it's starting to move higher. The difference between the US and Japanese bonds on the 10-year, so the interest rate you can get from investing money in those two countries, is getting smaller. And that's a big change, and so the yen would naturally get stronger on this. You saw that move from 113 down to 111, where it's been caught with the trend. Now, so it's big levels here for the dollar yen, big levels for the euro. Both have been held at the trend, at the key supports and resistances, respectively. And so the outlook is really dependent on whether we can make that next leg higher. So far, though, the dollar is holding. So for the short term, US dollar CNH did hit a fresh high this morning. Has had some reversal though, so this is opening up the door for potential rebound in the Aussie. You can see the Aussie dollar does respond very aggressively to any changes in the US dollar CNH. Aussie dollar had some really nice job starter last Thursday. Hasn't been able to hold that gain though, as the CNH has continued to weaken, and so the fate of the US dollar, of the Aussie dollar, is very much linked to the Chinese yuan at the moment. And until we get a top in on the dollar yuan, it's very hard to see any sort of sustained rally with the Aussie dollar. Even if the US dollar was to weaken, it wouldn't be the first pick to go start buying against. Gold is very similar boat to the euro. A nice big bounce last week on Trump's comments, have been wound back a little. Still though, we are potential in showing some bottom patterns here, and so the next 2 days is really important for this story. Whether the US dollar is topped or not, we will know that by the end of this week, and potentially know that by the end of the next couple of days trading. And if it has, then the door is open for new trends. If it does want to stay a little bit more stable and go range trading, that is fine as well. It'd just be better for us as traders if we do develop new trends that can be traded. Alright, I'll be back tomorrow for an update. We do have the Aussie CPI tomorrow. We also have the monthly webinar where I do update you on the big themes going ahead for the month after. Next August is going to be a super month in terms of big announcements, mainly from the UK. We do have the Brexit negotiations coming along, but it would be very interesting to see any changes in monetary policy, any changes in the trade war rhetoric as well. A lot of those things are coming to a head as well in August. We'll be discussing those in that webinar. So if you have time, you can sign up to that webinar in the link below. That will be tomorrow at 7 PM Sydney time.